Hello and welcome back to Explain the Charts, where we break down complex charts and current events to help you make smarter trading decisions. Today, October 10th, we're taking a look at GBPUSD, one of the most traded currency pairs in the world. The pound sterling has been experiencing a roller coaster ride in recent months, with a surge to 30-month highs in the first half of the year, followed by a pullback in recent weeks. This volatility is driven by a complex interplay of factors, including economic data releases, monetary policy decisions by the Bank of England and the Federal Reserve, and political developments on both sides of the Atlantic. Let's start with the daily chart, which provides a long-term perspective on GBPUSD's price action. If we look at the last 12 months of candles, we can see a clear bullish trend, with higher highs and higher lows. This trend was reinforced by the recent rally to the 1.3142 level, which was a 15-month high for the pair. However, the market has since pulled back, and we're now testing support levels around the 1.3000 mark. This pullback is likely due to a combination of factors, including concerns about a potential recession in the UK, a more dovish stance by the Bank of England, and a hawkish Fed. The recent U.S. inflation report showed that inflation is still stubbornly high, suggesting that the Fed may not be as quick to cut interest rates as previously anticipated. This has put upward pressure on the U.S. dollar and downward pressure on GBPUSD. Looking at the daily chart, it's important to note the support and resistance levels that have been established. The 1.3142 level is a key resistance level, as it represents the recent high. The 1.3000 level is a key support level, as it represents the September swing low and the July high. A break below this level could signal a continuation of the downward trend and a potential move towards the 100-day moving average at 1.2939. To get a more granular understanding of the price action, let's switch to the hourly chart. The hourly chart reveals more short-term price fluctuations, and we can see that the market has been consolidating in a tight range over the past 24 hours. This consolidation is likely a result of traders waiting for the release of the September U.S. Consumer Price Index, CPI, data, which is expected to have a significant impact on the U.S. dollar. A higher-than-expected CPI reading could strengthen the U.S. dollar and push GBPUSD lower. On the other hand, a lower-than-expected reading could weaken the U.S. dollar and give GBPUSD a boost. Looking at the hourly chart, we can identify some potential support and resistance levels. The 1.3050 level is a key support level, as it represents the recent low. The 1.3093 level is a key resistance level, as it represents the day's high. If GBPUSD breaks above this level, it could signal a short-term bullish trend and a potential move towards the 50-day moving average. Finally, let's take a look at the 15-minute chart, which provides the most detailed view of GBPUSD's price action. The 15-minute chart is ideal for identifying short-term trading opportunities, but it can also be quite volatile. If we look at the last 6 hours of candles, we can see that the market has been oscillating around the 1.3100 level. This range-bound trading indicates that neither bulls nor bears have a strong grip on the market. Traders are likely waiting for a catalyst to break out of this range, which could be triggered by the release of the CPI data. As we approach the CPI data release, it's important to watch for any signs of price action that may suggest a breakout. If GBPUSD breaks above the 1.3100 level, it could signal a short-term bullish trend. On the other hand, if GBPUSD breaks below the 1.3000 level, it could signal a short-term bearish trend. In summary, GBPUSD is currently in a volatile phase, with a pullback from recent highs, but with a longer-term bullish trend. Key support and resistance levels to watch include 1.3142, 1.3000, 1.3050, and 1.3093. The release of the September U.S. CPI data is expected to be a major catalyst for GBPUSD's price action, potentially driving a breakout. Keep an eye on the 15-minute chart for any signs of price action that may suggest a breakout, and be prepared to adjust your trading strategy based on the CPI data release. Thank you for watching Explain the Charts, and happy trading!